Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, the jobs report came out. It's a little bit stronger than expected, coming in at 390,000 non-farm payroll jobs added, where the expectation was 328,000. And so that prompted Fed Governor Mester to come out and say she favors aggressive rate hikes because she's not seen evidence that inflation has peaked just yet. So a little bit of a down day in the markets. And Elon Musk, is he now an economist? He came out and said he has a super bad feeling about the economy, and he's cutting 10% of his labor force at Tesla. We'll talk about all those things. Let's take a look at the charts. At the time of this recording, it's after the market is closed on Friday, so the futures market is closed. Before we take a look at the charts, I know a lot of people out there say, hey, if you like these videos, smash that like button. Well, let's not break anybody's keyboard. If you like our videos, we'd really appreciate it if you hit that like button. But a simple click will do. All right, taking a look at the market, you can see that little bit of an inside day today, which is interesting. It kind of feels like, all right, we've gone up to 420. We're right here at that resistance level, and the market backed off. So is that telling us that's it? All we're going to do is run up to resistance. Remember the scenarios that I presented to you. It's still my belief that we break above those on all the major moving averages, and then after everybody feels like, hey, all the markets have broken above resistance, maybe the bottom is in. And then that's the time we worry about things moving to the downside. It feels too easy just to run up to resistance and roll over. That's a possibility, but after running up and almost hitting that 420 level yesterday, a pullback today, be it an inside day, you want to look at volume. And you can see that pretty low volume, so really lower volume than we had yesterday. So today didn't really mean a whole lot. And then when you take a look at the VIX, you can see that looking at the VIX, we're still hovering around here just below 25. There was some intraday volatility there, but not a whole lot happened in the VIX either. So this wasn't the kind of selling on a down day that we've been looking at recently. And we have a confirmation of a downside breakout in the VIX. I feel like the VIX wants to come down and at least test that 20 level. Now, what I think or feel means nothing. We analyze the charts. That's what we do here at Elliott Wave Options, and so that's all that really matters in the end. But I did think I would share that that's my viewpoint. And then we come back and look here at this inside day, down day, take the volume off, and then put the moving averages on, which I think clears the picture even a little bit more. We're a little bit away from the 10-day moving average. We were right against that resistance level of 420, and then here we are back down at the 10-day moving average. So why were we down today? Was it setting up something more to the downside? We'll look at interest rates in a second, but the jobs report came out and we added 390,000 jobs, as I said in the intro, versus the 328,000 that were expected. And then Fed Governor Mester came out and said she favors aggressive rate hikes because she just doesn't see enough evidence that we're starting to get a handle on inflation or that inflation has peaked. Another interesting note here is when we take a look at the 10-year, it pulled down a little bit, nice little doji there, but if the money was moving out of the equities market, we would have had a downward move in rates. Remember, as prices go up, yields and rates go down. But that didn't really happen, so it wasn't like money's flying out of the bond market into the equities market either. It's like I said, today just didn't really seem to matter much. Just a little bit of a pullback on low volume, back down to the 10-day moving average. I still think the scenario of breaking above 420 holds and that we move lower, but I want your opinion. What do you think? Do you think that's it? We just bounced up to resistance on these moving averages and now we're ready to roll over? Or do we break the moving averages, go a little bit higher, and then do you think we roll over from there, or all clear, that the bottom is in? My viewpoint is that I feel like we need to break those resistance levels. All the media outlets say, hey, the bottom is in, and then watch out for the rollover to the downside. See how that plays out. So taking a look at oil, nice move to the upside. We talked about this in TradeFinder. We look every Tuesday night, by the way. If you haven't signed up for a TradeFinder before, please do so. We look every Tuesday night, 9 p.m. Eastern Time, talk about the markets, look for trading ideas, and have a live Q&A. It's a lot of fun. So you can sign up right underneath this video. Do so if you haven't already. Talking about oil and the pain that we're going to have at the pump, and you can see that this breakout above this ascending triangle pattern. We do have an alert on this for our alert subscribers at ewotrader.com. But breaking to the upside, the pain at the pump is going to continue. Oil prices are going to, or oil prices have gone up, so gas prices are going to go up as well. So now let's take a look at Tesla. And holy cow, Elon Musk is a lot of things. He has a lot of respect from a lot of areas, but is he an economist now? Because he came out today and said that he was going to cut 10% of the Tesla workforce because he has a super bad feeling about the economy. Okay, well, that's not going to be good for your stock, Elon, when you come out and say that, but maybe he's being just completely honest. And he feels like, hey, we've got some problems here. We are at the very early stages of what, by all means, or all evidence is going to be an aggressive rate hike cycle from the Federal Reserve. I don't disagree with him at all as far as where the economy goes. It's interesting to have the CEO of a big company come out and say that, and you can see that it hurt his stock. So we broke below the 10-day moving average on Tesla today, and if we get a follow through there, we have not yet labeled the wave 4. So I do feel like there's a chance that we bounce back up. There's too much separation between the 10-day and the 50-day moving average. It didn't come up enough and close that gap enough, in my opinion, for us to be in the wave 5 to the downside. So perhaps it was just a one-day phenomenon on his comments, and then we rebound, especially if the market does break above 420, we rebound and move back to the upside there. If you want to look at volume, pretty decent volume there, so you have to respect that for the potential that 4 could label right there, and then we move lower. But as I said, the one missing ingredient in that scenario is the fact that the 10-day moving average has not reached the 50-day moving average just yet. So looking at the diamonds were the first market to move back below or move below their support level, and they're the first market to move back above resistance, but we didn't get much of a follow through. We talked about this in our insiders meeting last night, which is the webinar we do each and every week for our alert subscribers, on how we really needed to have a good solid close above that 330 level today to confirm the break, and we didn't get it. You can see the actual close was 329, just a hair below 330. So you could say, well, we're consolidating above 330. I wouldn't argue with that. But if we're going to break above these moving averages and go a little bit higher, as I feel that is a possibility, then we needed to have a little more behind that. But we're going to see how things play out over the first few trading days of next week. We're awfully close. So if we look at the Qs, the one that's been lagging, I've mentioned to you numerous times that I felt like it would lag. And then you can see that a little bit of a move back, but also just down to the 10-day moving average. So as I said, the selling today, lower volume, moving averages moving back down to the 10-day moving average, right underneath resistance levels, except for the diamonds. We haven't gotten back to quite to 320 on the Qs, so it is still underperforming. The S&P's right there, the Dow's right there. Qs are still a little bit lower, but all moving averages, all major indices are above the 10-day moving average. So let's take a look at some things internationally. With Australia, just a little bit of a brief pullback, but really nice move above 25. It would have been nice if they could have had a follow-through and close for a second day, a good confirmation of that break above 25. If Australia can break above 25 and confirm that, there's really nothing in the way of them moving back up to 27 on the EWA and looking for new all-time highs. But we didn't get the confirmation day we were looking for. But if you look, you can see the 10-day moving average has broken above the 30. That's something that I know a lot of institutional managers look at. And the fact that we were above the 10, 30, and 50-day moving average hovering right there at 25. So again, no harm, no foul above the 10-day moving average, but not really the follow-through day that you would have loved to have seen. Canada has been right in lockstep with Australia as, in my opinion, the two best performing markets at the moment. We'll see how that plays out. And so Canada broke above 37. That was a key. They needed to get back above there. You look at the 10-day moving average, well above that. Also having a cross between the 10 and the 30-day moving average and above the 50-day moving average. So another inside day. If you're wondering what an inside day is, it means the high of the day was lower than the previous day's high, and the low of the day was higher than the previous day's low. So the entire day is encompassed from the previous day, known as an inside day. What does that mean? It's kind of like a doji in the candlestick world. It's like we're not really sure. It's kind of indecision. Often there's a change of direction or a directional move following it, but that inside or outside day just kind of means indecision at the current moment. But still above the 10-day moving average. So Canada and Australia looking good. If we look at India, it just had joined the party, just finally starting to break above this area of consolidation right there at that wave 5 low, right around just above 40. And it had moved up, got near the 50-day moving average, and then back down. But it did hold the 10-day moving average on the close. But this is probably one of the weaker looking charts of all the international markets that we're going through and looking at. If we take a look at the DAX, another inside day. That's kind of the theme of the day, I think. Inside day. But look, we had a positive 1030 cross, so could we get a little bit more out of the DAX? It's been beaten up. I've talked about this if you looked at the previous videos, and if you haven't, go to our channel and look at our calls on the markets over the last several months. I think us and Elliott Wave have been pretty spot on with what's going on in the market. As you know, Germany has been underperforming the rest of the world for better part of a year, and so they're getting a little bit of a break here with a bit of a bounce, and with a positive 1030 cross and above the 50-day moving average, they're trying to join, not in the same scenario, but trying to join Australia and Canada as being better performing international markets. But that tiny inside day, we'll see how that plays out. Thought we'd go ahead and add in the UK for this market. You can see that with the UK market, the reason I wanted to bring this one up was because of the EU's. I know it's not the exact same thing, the UK and the EU, but the EU's view of not taking Russian oil, at least for now. See if that was going to be a significant scenario over there. Not really. The UK also closing above the 10-day moving average, also a positive cross of the 10 and 30, and sitting above all the major moving averages. So you can see that from an international standpoint, there's some markets that are set that could really move higher if our market wants to move back to the upside. We're kind of the ones that are lagging here. We're above the 10-day moving average, but we haven't had a bullish 1030 cross, and we're not above the 50-day moving average yet. So we'll see how that plays out at the beginning of next week. But I just wanted to highlight the fact that even though today was a down day, really didn't mean a whole lot. Markets held above 10-day moving average, VIX, a little bit of intraday volatility, but nothing significant to the downside. So it's just kind of, all right, let's have a Friday and then go to the weekend. We'll see what happens next week. Maybe we get some more directional movement next week. Hope everybody has a wonderful weekend. Thanks for your time. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.